Tuesday, the 10th of October. Hope you all had a good evening. I'm just back after a day out of the office yesterday, so catching up on things, and as far as I can see, it was a relatively quiet day yesterday. It was Columbus Day, of course, which meant various US market closures, but cash equity trade in the US was open, but nothing really too groundbreaking to speak of. Very marginal lower closes across the three major indices, ranging from pretty much flat in the case of the Dow to down 0.2% in the S&P 500. That's kind of fed through, I guess, into a fairly light Asia session. European Open, the DAX here has gapped up slightly in the futures market, but still seen slight negative, likewise in the Euro stocks. As a consequence of this slight risk aversion in gold prices still remaining elevated from what was a bit of a move higher seen overnight. Technically, if we did break that level which we printed just before the US left the market yesterday, which is also around the highs that we're seeing from going back to what would have been the 8th, so kind of Sunday night reopening of trade. And then we found that as a bit of a flaw then on that initial break overnight in Asia session, and we're trading up at R1 up about $5 this morning. Geopolitical concerns are kind of the main focal point. Spain in particular, but there's still a little bit ongoings with North Korea in regards to the usual rhetoric I would kind of classify it as. Elsewhere, fixed income markets relatively flat. The 10-year managing to claw back some losses that we're seeing kind of overnight in the Asian session, but we're sitting pretty much right on pivot, which is basically unchanged on the session. Major pairs, the dollar a little bit softer this morning. We're down about 0.2%. Looks to be more a case of the dollar kind of prevailing weakness from what was seen at the beginning of the Asian session. Really, we drifted low in the dollar yesterday, so both major pairs are seen marginally higher. Cable, just having a look at that chart here, where we've got upside level of significance 132.11, just to keep an eye on that being the high that was seen yesterday morning. And I was just looking on a daily continuation chart. This was a chart with text that I had put together about a week ago, and I just still had it up on one of my tabs, and I was looking at it, just seeing where cable responded to the various levels that we were looking at on the downside when we went through this phase post her Florence, that's Prime Minister Theresa May's Florence speech. We moved aggressively lower, taking back a lot of that hawkish Bank of England rhetoric that we had, and that's got down to 130.59, which was that kind of double top we were looking at from May and kind of early July. Before then, we've seen a bit of a bounce around that 130.50 level. And then if you look where we are at the moment, then, well, if I go to a 240-minute candlestick, this was obviously the two phases that we had of a hawkish Bank of England and an interest rate decision, and then that commentary out of Flager, one of the dovish members, turning hawkish, was when we originally hit this recovery high, just shy of 137 really in cable, to back where we are now. So interestingly, the current price point at this 132.11, should we retest yesterday's high, would be pretty much back to exactly where we were pre the hawkish Bank of England developments that we had, which was really mid-September, so this time about a month ago. So I think that's a fairly significant level to keep an eye on as resistance. Just above here on the daily levels, you've obviously got 132.20 also being the R1 on the session, so 32.11 and 20 to keep an eye on the upside. Just quickly on the UK, obviously it's quite a lot of news flow pertaining to the fact that there was a white paper released yesterday from the government. So this is what a lot of the newspapers are running with. UK's May backed over a no-deal stance as Brexit stakes rise. The government white paper saying businesses must prepare for the worst. Obviously this has kind of cajoled the more hard Brexiteers within the Conservative Party, Boris Johnson, Michael Gove, they've been very supportive of the PM with putting forward this kind of more kind of forceful stance, if you like, going into what would be the 5th round of negotiating with Europe. I found this quite hilarious and really goes to show when you start thinking about the state of global politics at the moment, with the kind of communication from Donald Trump and the way he kind of he delivers his speeches and his comments via Twitter and so forth. Well, this is the UK's latest. May released 2 white papers yesterday and said she's made enough overtures to Brussels. She said the ball is in their court, which the European Commission replied, no, the ball is entirely in your court. Quite frightening, really, that we're still at this stage of brinksmanship, of which, to the point that I've actually was reading further articles this morning suggesting that, okay, this is fine, Theresa May is having this more, I guess, drawing a line in the sand of what she's willing to do at the negotiating table, but they haven't actually employed enough people within the UK government to facilitate the workings through to prepare for a no-deal situation. This is a hypothetical white paper that was released on Monday. So we shall see. I mean, at this point, it still seems that Theresa May is trying to balance a domestic issue of her performing exceptionally poorly at her last speech at the closing of the Tory party conference, and it almost feels as though she's done this to get back on side those key senior supporters who may have lost some faith in her and her ability and leadership of the Conservative Party. What does this mean for Brexit talks? Well, it's not good. It just means that the likelihood is, I would suggest, that definitely not what was the original, don't forget, time frame of trying to strike a deal with Europe on the transitional side by October. I think that is definitely not on the cards. By Christmas, I even think is a push, going at the pace that we're at. And although this hasn't really translated into a direct weakness into the pound right now, if we start to get to the new year and we are still at the same situation that we're in at the moment, political uncertainty will start to escalate to the point of increasing its weight on the sterling currency. Don't forget as well, this is coming, of course, at a time where the Federal Reserve is expected to hike interest rates, which then should be, if on the fundamentals side, inverse in terms of potential movement in the respective currencies if you're trading that pair. So that was the UK situation. Meanwhile, elsewhere, the other thing that people are watching quite closely at the moment, of course, is the Catalan issue, as they face a day of reckoning over their independence. Why is this? Well, the Catalan's government determination from break from Spain faces its moment of truth. The regional parliament meets to consider declaration of independence. So the Catalan president will address lawmakers in Barcelona at 6 p.m. local time today, so it'll be later on, late afternoon. This is on the outcome of the October 1st referendum, which of course was ruled illegal by the Spanish courts. Now, this is a graphic that Bloomberg put out this morning. This is kind of a decision tree, I think they refer to it as, but it's looking at how events in Spain could unfold over the next 24 hours. And so the first decision really comes down to the fact that will Catalan regional government unilaterally declare independence, yes or no? I guess the most positive outcome in terms of causing least disruption to financial market assets would be no, they don't call for it. So under pressure from businesses and street protests, the separatists stopped short of declaring independence. This then goes to a second decision. Will the federal government invoke emergency powers to intervene or suspend the regional government? And I guess if that was the case, then a no here, so going down the right-hand side, would be responding to the separatists' olive branch. Rajoy also takes his finger off the nuclear button, so to speak. The two sides sit down to air their grievances and plot a way forward. Spain survives. So I guess this is kind of the most market-friendly situation. They don't call, and then Rajoy kind of drops the hammer and makes a political point and says he's had enough. He decides to use emergency powers anyway, reasserting Madrid's control. Or if they do call for independence, then really the two outcomes are either in a second decision, will the federal government invoke emergency powers? Yes, Rajoy uses constitutional tools at his disposal. This would be then, forget Article 50, we're now talking Article 155 or 156. And this basically is to suspend the regional government and carry out arrests. This would probably lead to a lot more destabilization within the Catalonian region, much to what we saw with the physical violence that occurred during that actual vote itself at the beginning of the month. If then it's no, and they vote for independence and the government does not invoke emergency powers, so Rajoy stops short of reaching into his constitutional toolkit at fear of stoking a direct confrontation with the region, talks are held to discuss the way forward, Rajoy faces calls to resign. I think that's probably the most unlikely. I very much doubt that Rajoy, given his stance so far, would put himself in a position which basically would mean that he would need to resign, saying that he basically would agree with this call for independence. It's probably the least likely. So probably on a, I guess on a scaling effect, you're kind of going from right on the tree, no, 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 yes, and then if they call for independence, then yes, and counter acted by the government, then invoking 155 and 156 of the article to take back those powers. So could be interesting. This isn't happening until after the European cash close, so it's about 5 p.m. London time. But certainly, if any FX traders who are sticking around late, this could be definitely worth watching in the currency market. You might have some response in euro currency. I guess potentially if they don't call for independence, whether there'd be maybe a relief rally of sorts, very short-lived I'd imagine, because there's other bigger things at play here. That could be one way to look at it. Or if they do call, then you probably have to follow it through. What is the second decision then from the federal government? What their decision might then impact the euro late into the evening, and then certainly the IBEX and other Spanish assets yields will be watching when we come into market tomorrow. Just wrapping up a few other things. We did have some German data this morning, and if you thought that what was a higher euro, although we have backed off that kind of breach towards 121 only a few weeks ago, German exports continue to be robust. German exports posted their biggest monthly rise since August of 2016. This is some trade data which came out of Germany earlier this morning. And then on the oil side of things in commodities, obviously I wasn't here yesterday, so I'm just kind of playing a bit of catch up, but probably worth sharing the OPEC Secretary General talking yesterday. This I thought was a kind of new step in diplomacy. If you can't beat them, join them. Well, let's just get the US involved in OPEC, non-OPEC deals. The SecGen saying that US shale oil producers to help cap global supply. So the Secretary General of OPEC calling on US shale oil producers to help curtail global oil supply, warning extraordinary measures might be needed next year to sustain the rebalanced market in the medium to long term. So this isn't out of the realm of possibility in terms of US also adhering to some sort of compromise, because ultimately if you're wanting to keep the price of oil elevated to the point of which everyone is making money, i.e. not quite to the levels of which are going to balance the fiscal budgets across the OPEC producing nations, but certainly if we get to the lower bound, if I put a daily continuation chart here, if you remember when we were getting down to, in the summer, 42, so what I'm looking at here is kind of the low point of 2017 thus far. You'll remember there was a lot of talk about spreads widening in regards to the credit worthiness of a lot of energy related firms in the US who are in the shale industry, because the fact that they had borrowed money in regards to continuing to pump into R&D and bringing facilities back online, the possibility of them defaulting on those loan obligations if the price of oil was to drop below their break even. And certainly once oil gets down to the lower bound of 40, it also starts to make people in North America, from a producer's point of view, the corporations point of view, rather nervous. And although the price has bounced well off this since the low in midsummer, we're back up to a kind of $49, $50 is kind of the sweet spot, so to speak. But certainly it wouldn't be unusual to have also the US want to be in a situation of keeping oil up at around a $50 point, so when they're well in the money here. So definitely an interesting progression. Finally, one thing I just quickly wanted to show you, this is something you may have seen in the morning research, because today is a fairly landmark day and it's something that Deutsche Bank always do. This is a significant day because it marks 10 years since the pre-global financial crisis peak in the S&P 500. And what Deutsche tend to do is they'll put together a kind of summary of performance over the period, which you can see here in this graphic. This is the total return of assets 10 years on, now versus the peak of the GFC in dollar terms. So what I'm looking at here on the far left is the best performing is, you guessed it, the S&P 500 up 102%. On the flip side, sorry to say for VAS, but Athens, the clear underperformer, which probably is absolutely no surprise given the sovereign crisis of obviously 2010 to 2012. The Greek equities are down 85%. So again, Greek equities down 85%, European banks down 54%, comparative to the S&P up over 100%. I think what's quite interesting here is if you're looking at the shades of blue that they've got, it's actually corporate bonds which have come out on top here as an overall sector, I guess, if you were to define it by a classification. You can see here US high yield, investment grade non-financial, so on and so forth. Gold also up there, taking what would be the 5th spot. And on the other end of the kind of table, what's quite interesting here is cable. So 7th worst performing asset that's being measured here is in fact sterling against the dollar, which one would anticipate in the next 12 months has the propensity for potential further downside, given the reasons aforementioned of Brexit. Okay, quick look at the calendar for today. First of all, we have had some UK data overnight, just so you're aware. The BRC retail sales numbers, they actually came out, as far as I'm aware, a little bit better than expected. Not because of the volume of retail sales per se, but more to do with the fact that the cost of goods are going up. People are still purchasing, so they're getting more bang for your buck from a profitability point of view from retail sales. So that number was slightly higher, but this number rarely has any impact on the market, and that's been the same case overnight. Going through the morning, as I said, pretty solid German export numbers, part of their trade balance report this morning. And then we go to the UK, where at 9:30 we've got a cluster of economic data. You've got trade balance, industrial manufacturing output, alongside the similar reading coming out for construction sector, all for the month of August. So just keep an eye on that for any sterling traders. Going into the US afternoon, it is pretty quiet. There's actually not much in the way of major economic data. NFIB Small Optimism Index, that'll be at 11. And then you've got Redbook, IBD Tip Economic Optimism. So nothing really that's going to spark, I would say, direct market movement off the back of. So I guess usual rules apply. It's kind of just keeping an eye out for anything from Trump, any updates as well on the kind of sentiment going into this Catalonian parliamentary hearing about the independence situation, which is occurring later on, late afternoon. Speakers, though, there is one notable one to be aware of, although I'd say the likelihood of this particular chap becoming the next Fed chair is extremely low. Nonetheless, this is one of the most leaning dovish members of the Fed, given the fact that the market's erring on the more hawkish side going into the December meeting. Be interested to see where Kashkari sits at the moment in terms of his view. That'll be at 3 o'clock, speaking at the Regional Economic Conference, Kaplan on until the overnight session. Okay, that's pretty much it. As I say, overall it's pretty quiet, and I think that's really reflected in the market prices this morning. I would say, generally speaking, when it's like this, might be better served just waiting until the US come into market and the volumes start to pick up, and our friends across the pond quite often, now that they're back after Columbus Day, might tend to drive the markets going forward. Okay, have a good day. Any questions, just let me know. I'll be in the chat room. Happy to help.